It's a really great time to be deploying capital. I think there are candidly fewer opportunities than there might have been years ago, but I think there's also kind of few silly opportunities and less of a temptation to maybe do some things that I think a lot of us in this industry had done in 2020 and 2021. And so I'm pretty excited about the opportunity to be deploying capital over this year and the next year even. I do feel this market starting to turn.
Welcome to Brave. Learn from Southeast Asia's best tech leaders. Build the future, learn from our past, and stay human in between. No BS on success. I'm Jeremy Au, venture capitalist, serial founder, Harvard MBA, science fiction nerd, and dad of 2 daughters. Every week, we debate startup news, interview changemakers, answer listener questions, and share personal insights. Join our movement of over 40,000 members and get transcripts, resources, and community at www.bravesea.com. Stay well and stay brave. Join us at the Startup Conference Echelon X. Engage with over 10,000 of Asia's innovators and decision makers on May 15 and 16 at the Singapore Expo. We have 30 exclusive complimentary tickets for our podcast listeners. Sign up and use the promo codes BravePod or ECXJeremy to claim your free tickets now. Hey Fady, really excited to have you on the show. You've actually had such a great global career on the capital side. Really excited to have you share that story. Could you share a little bit about yourself?
Thanks a lot for having me on, Jeremy. Excited to be here. So my name's Fady Abdel-Nour. I'm currently a partner at Antler Elevate, which is the growth fund of the Antler platform. Have been in investing for most of my career with stint at Naspers before this, leading fintech investing, and worked at Ontario Teachers doing kind of late stage pre-IPO investing before that.
Amazing. So how did you first start out your career?
Yeah, so I started my career off in investment banking. I went to an undergraduate degree in business in Toronto. And it was one of those things where I actually at the time thought I was going to be a lawyer. And so went in to do something before I went into law school because you have to do a few years before that. And so I thought I would do a degree in something practical. I briefly considered a stint in math. Actually, I got into a mathematics program, but I said, math, that's going to be completely useless. So anyway, hindsight's 2020 on this kind of stuff, but went into a business program in Toronto, entered that kind of business program and thought I would spend time on accounting. I really liked economics. I really liked numbers. And so that seemed interesting. I ended up joining the investing club early on, learned about markets and thought that was pretty fascinating. So instead of specializing in accounting, I went into finance and then I learned about this magical thing called investment banking and was like, oh, that sounds kind of interesting. You get to be involved with all these companies. Oh, they'll pay you how much to do this, to make slides? That sounds not so bad. And so I went into that and I did my investment banking career for a few years instead of going in accounting or instead of going to law. I think it was great, a phenomenal training ground. I was part of the M&A group there, so really got to work on a lot of deal experience. I actually did my internship in investment banking in the summer of '07. So it was really kind of the peak of the financial market. And I got lucky because I think there was a lot of deals going on. And so I remember working on what we called the LBO machine, where we had these very simple models. And even as an intern, they would give it to us and say, hey, try to figure out which of these deals or which of these kind of public companies would make good LBO targets. So even as an intern, I got some interesting experience and it wasn't just making slides and things like that as I joked. That was actually a really good time to start off my career and I think was a positive experience. And it's part of the reason I kind of went back after my summer.
Amazing. And what's interesting is that you went on into the Ontario Teachers Pension Plan. Could you share a little bit more about why you decided to work?
Yeah, so I think I always knew that banking was going to be temporary. I didn't enjoy my time there, but I always thought I didn't want to just be an advisor. I wanted to be someone who had skin in the game and kind of putting capital to work. In Canada, the pension funds are kind of pretty dominant. They control a lot of the capital markets. And so there's a handful of private equity firms, but most people kind of went off and worked at some of these Canadian pension funds after they'd left the sell side. And so I joined Ontario Teachers as kind of one of the opportunities there. I actually joined in a group called Long-Term Equities, which sat between our infrastructure group and our traditional private equity group. So we had a lot of assets in infrastructure that were regulated assets, toll roads, ports, things like that. And then we had our private equity group that was kind of more traditional LBOs, 5 years and exit. And as a pension fund, we thought there should be a group of assets that you could hold for a long time, 10, 15 years, that maybe generated teens IRR, but that were lower risk than what would be in the private equity group. So I joined that, and it was a good deal experience to start. We looked at towers, we looked at parking lots. We actually had an interesting asset, which is called Camelot, which owned the UK National Lottery. So some interesting stuff there. But I find myself basically just testing how many of these companies were defensive, recession proof. Can this company consistently grow 3 to 5% a year? And while I completely recognize the need and the use of this asset class for the pension system, it just wasn't getting me up in the morning. I wasn't really excited by it. Actually, an opening came up around the corner from where I was sitting at a group at Ontario Teachers called Relationship Investing, which tells you absolutely nothing about what the group actually does. But it was kind of one of the first crossover groups. And what we did, what we called kind of solution capital. So most of what we did was pipe financings for companies that were looking to buy companies. We did companies that were over levered and they needed some capital to delever. But then we also did some block trade. There was even a little bit of catalyst event driven trades, but we also did a lot of pre-IPO financing. And that was really my introduction to the world of tech investing, because we had this, again, this traditional private equity group, but they were really focused on buyouts. They wouldn't do buying 2%, 3%, 5%. Kind of companies that would IPO in the next few years. And that's really where I got pretty excited by some of the stuff that we were doing, this kind of private asset class where a lot of the deal flow ended up being technology related.
And what's interesting is that you were seeing the technology wave at that time. What were the kind of things you were seeing technology wise or in terms of the startups and companies?
Yeah, it was a super interesting time. I started my career in Toronto and I did that for a few years. And the deal flow there was a lot more traditional. We looked at things like, we did a pre-IPO round in Michael Kors, which I had worked on. And we did a pipe financing for a Canadian company called Hudson's Bay to buy Saks Fifth Avenue. I then started spending a lot more time on deals internationally and started spending time on Asia. And eventually I actually got asked to move out to Asia and start the office in Hong Kong. And that's really when I started seeing a lot more of this deal flow. I worked on Ontario Teachers' first private deal in China, which was actually an online classifieds business called Ganji that we ended up selling to 58.com. I worked on a business called JD.com, which is now a large public company, which was our second investment in China, our second private investment in China. So it was this really interesting time because capital in China it wasn't easy to come by, but really it was kind of this first wave of penetration pieces investing. We had seen Amazon, we had seen Facebook, we had seen some of these large players emerging in the West. And now we were getting these businesses coming out of China, India, Southeast Asia that were replicating what was happening in the West. And it was just a really interesting time because you could take a look at those business models, take a look at those analog and really kind of invest based on what was happening before. It was almost like you had a crystal ball in those times. And I think honestly, at the time, I was still pretty early in my career. I think I didn't really appreciate how good we had it, because right now you sit in Southeast Asia and especially in China and India, a lot of these business models are now starting to innovate and leapfrog the stuff that's happening in the US. And of course, the pace of innovation is much, much quicker. And so then you had kind of maybe years between what was happening in the US and what was happening in China. And so you could really kind of take your time and see what happened there and kind of benchmark and compare. And now you have weeks, right? Maybe months before these business models are replicated if they're really good business models. And you actually don't have the ability as much to see what the actual outcome will be. You just know that it's attracted venture funding and it's grown well, right? You don't have the benefit of saying this is 5 years ahead. And so I think that was a really interesting learning that I wrestle with today as I look at some stuff in these markets compared to when I was looking at this a decade ago in China and India.
And what's interesting is that after that, you moved to Naspers, which was much more focused on this as well. Could you share more?
Yeah, so I spent a lot of time at Ontario Teachers, and I think there, even though I was a generalist and I was doing public and private, I really gravitated towards this pre-IPO stakes. I think a lot of it was also a function of just the maturity of the capital markets. Kind of solution capital pipe financing didn't exist as in an as robust fashion in these markets as they did in the West. Maybe a little bit of Japan, maybe Australia, whatnot. But that Australia, those markets weren't necessarily where the growth was. And then at the same time, I also gravitated a lot towards technology because that was the majority of the deal flow and also what I found exciting. And so I wanted to go to a place that was really focused on technology investing. And so this opportunity came up at Naspers. I actually moved out to Dubai for a year to be part of that team. It was in the fintech investing team. And I had thought, hey, I'd done consumer internet investing. Fintech's basically the same thing without financial services. Financial service investor would be a better place to do something than a consumer internet investor. But it was a great learning experience. I had this dual pronged role as leading M&A at PayU, which is a big payment gateway that was wholly owned by Naspers. Did a lot of M&A, which is actually not what I had expected, as well as leading fintech investing for Naspers and Prosus. So did everything from Series A investing, $1 million check, all the way up to worked on buyouts of several $billion. So ran the whole gamut and really became a sector specialist in fintech. And today, even though, I'm a generalist, I still spend a lot of time on that area because I think it was just such a formative part of kind of the deal flows I looked at.
Amazing. And what were some of the interesting things or companies or trends that you observed while at Naspers?
Yeah, so I think I'll bring it back to some of the conversations we had earlier about this penetration thesis, right? So although we're in a world where trends get replicated a lot more quickly, when you have regulated businesses, sometimes that's harder, right? You need to get licenses, you need to deal with local regulators to allow you to. And so I think we spend a lot of time on payments and alternative lending in the space because these markets had massive gaps in terms of digital payment and massive gaps in terms of credit. And so we spent a lot of time on India specifically financing companies in payment and watching the digital adoption trend grow. And now I think it's a well-known fact for people spending time in these markets that India has UPI, one of the strongest real-time payment networks in the world. And I was investing in fintech at the time when India went through demonetization, right? So you kind of woke up one day and for a period of a week, in India, when you had e-commerce, something like 70% of it was paid cash on delivery. So someone would show up and you'd pay them the good. But for this week after demonetization, it had flipped. Like 70% of the transactions were actually digital. And so it kind of was this aha moment of this can actually happen in the country. And it wasn't that there was a massive kind of fall off in the number of transactions. There was some, but it wasn't a drastic fall off. So that was just a really interesting moment in time when we saw that happen and saw that India could become a country with kind of massive digital adoption. Now it's still behind a lot of other markets, but I think that potential stays there. And then we started investing in those trends in other countries, in Brazil, in Colombia, in Indonesia. And I think that was pretty exciting. And then, of course, we know now, I think China has leapfrogged the US in terms of digital penetration. And there's, I think, a higher percentage of non-cash transactions in China versus the US, which I think is kind of fascinating. So these levers do matter and do have strong impacts over time.
And you're working across different geographies and countries. So you mentioned you're seeing these different trends. How did you think about it from kind of like strategy and prioritization perspective?
Yeah. So I think that's actually something that I learned very well at Naspers. It was this. I think a lot of people from the outside view this organization as investing in a lot of things, pretty diverse, taking a lot of wide variety of bets. But from the inside, there was actually a pretty disciplined process in terms of how you would bring things to committee. One of the first things I worked on was this strategy paper that I still kind of referred to today on credit strategy. And so we would take a look at which markets have the largest gaps in credit penetration, and then which market are the largest, right? And so we actually started to focus a lot on Brazil and India to start with as very large markets, but still markets that were very, very underserved. And then we kind of prioritized which models do we want to go after. And so started looking at consumer lending to start. And then we went at looking at SME lending later. And so it was this really kind of macro view to start with. And then we just met as many companies as we could in those spaces. We ended up making a couple of investments in India in consumer lending. One of them was a business called Paycent that we initially funded the Series A at a 13 million valuation. We ended up actually acquiring the whole thing later at close to 200 million. I guess we liked what was happening there. And the founder rolled over most of the stake and actually has, since I left, been taken out the rest of the stake at close to a unicorn valuation. There was another business that we funded in Brazil, still one of the best business I've seen, called Credital, which was a digital mortgage company. We ended up, I think, co-leading the Series B with IFC at the time, that 32 million valuation, and then lots of other investors came after it. I don't know what the current mark is, but I think the last round was at a 4 billion valuation or something like that. It was this business where people were using credit cards to fund their mortgages, right? People that should be getting mortgages, and the banks in Brazil were just so conservative that these guys guys basically stepped in and lent on for their houses. In other markets, something that would be a no-brainer. But because of the interest rate environment, they were still paying, call it 18% interest rates on a secured product that would have been something like a 65% LTV with very, very little NPLs because it's secured. And so it's a really crazy business, because I remember the founder telling me I could stop originating tomorrow and I would still have cash flows for 8 years, right? Because of the duration of that product. I think we just saw some really interesting trends at that time. Look, of course, it was a low interest rate environment, and these businesses were a lot easier to back and a lot easier to fund. But I think in prioritizing these markets and looking for large outcomes, we were able to really find some exciting businesses.
And what's interesting is that after that, you went on to work at Antler. Could you share more?
Yeah. So I think at the time, I was starting to look at opportunities outside corporates and large organizations. I had been at Ontario Teachers, a $200 billion plan, Naspers or Process, $100 billion market cap companies working on 100 million transactions, if not kind of transactions of several $1 billion. And so I had never really worked at somewhere that was kind of smaller and more entrepreneurial. And so I was looking for that. At the same time, I was based in Hong Kong. And look, I think a lot of the listeners will understand the political environment in Hong Kong. So I was looking to leave there and come to Singapore. And so had spoken to a few folks in Singapore that were funds, and then met Magnus, who is the founder of Antler. And it was just really, really impressed with his vision, his scale, what he was building, how rapidly he would scale this business. And I was able to enter partway through the fundraise for this Antler Growth Fund that we were putting together. And so it's not often you get to join one of these platforms really at the ground floor. And so that to me was really exciting, the ability to take a lot of what I learned at these other organizations. I was pretty confident in myself in the ability to kind of find, pick, win deals, especially as part of a platform. But I saw at least the first two I could do as well as part of a smaller organization. I realized I'd probably have to hustle a little bit more to win deals. But I think that was something I felt comfortable backing myself on. But there was a whole range of things, such as kind of building a team around it, managing the firm, kind of really being part of a platform that we're building, that I think was excited to me. And I was really excited to have that challenge. So joined that platform. I think about 9 months later, we ended up closing the fund at a $285 million fund, which we were quite happy about for a first-time growth vehicle, especially in this market environment. I've got great partners in London and New York and a great team. And so pretty excited by what we've built and the opportunity to that.
And when you said that you were excited by the vision, what would you say is the vision?
So it's funny because it's actually a continuation of some of the things that I've been talking about, where entrepreneurship is not centralized, right? Of course, there's a ton of unicorns that come out of the US, the world's best venture market, but there's also this great ecosystem that exists in Silicon Valley that just doesn't exist in a lot of other places in terms of giving support to entrepreneurs, Saks Fifth Avenue. And I think still to today, we look at businesses in other markets and see what the differences are, try to share with our entrepreneurs kind of learnings from other markets. We have a great business in our portfolio called Aura, which is like a hims and hers of Southeast Asia for folks that are familiar with that. For those not, it's effectively a business and then subscription medication platform. But, some of the lessons that we've seen on this business in public markets, like their pivot to weight loss medication, Ozempic and whatnot, are things that we're now sharing with this founder. And he's very plugged in and paying attention to it too. But we can really underwrite to a lot of those trends and see how that can play out in markets like Malaysia and the Philippines, the same way it's played out in the US. So I think this vision of just globally distributed entrepreneurship and enabling the blossoming of new technology ecosystems in places they didn't exist before, it was part of the Antler vision. And I think that really resonates with me.
Amazing. What's interesting is that in your previous roles, you were a principal or global head, and this time around, you're a GP of a smaller fund. Could you share a little bit more about what that change in role?
Yeah, I think it's interesting because here on a day-to-day basis, everything you do kind of contributes to the success of the vehicle, right? Even at Process, Naspers, I was leading fintech investing or leading corporate development as a part of this payments platform, PayU. But it's still, to some extent, a lot of the strategy was being driven by what the investment committee would approve, what people would say yes to. And so you weren't always necessarily free to invest in anything you wanted to. And I guess I'll tell the story now. It's been a while, but I think one of the things that really got me thinking about making a move was this credit business that we had in Brazil, Creditas. we were looking to lead Series C, which would have been at a few hundred million valuation. I think Vostok ended up leading it in the end. So another kind of great fund. And because we didn't have a strong business in Brazil, our payments business, PayU, we got told by our investment committee that so you don't have any synergies with this business. You really don't have a right to play there. And so it's not something that you could be doing. And so we couldn't really be looking at these financial outcomes. And I couldn't really make a decision just based on something that I really, really believed was a great business. Whereas right now, our investment committee, it's me and two other partners. So if any of us has strong conviction, we kind of bring it to the table, have the discussion, and really put it in the book. And you get to spend basically all day right now with entrepreneurs, learning about trends, learning about their businesses. And I think it's such a fun job, right? That every day you wake up, you meet a handful of folks that are doing something that they're incredibly passionate about, things that sometimes a little bit about and sometimes nothing about. I tell this story sometimes, but I spent a bunch of time with a business that came out of our Southeast Asia early stage fund called Biogenes out of Malaysia. And it was doing something called aptamers. And I'd never even heard the word aptamers before I spent time on this business. And they're basically synthetic protein. So instead of killing mice and experimenting on mice, you can in a lab create this synthetic protein to test on. And it's a pretty innovative technology that I just didn't even know existed. And so I'd spent a couple months of my life learning about that. We never ended up doing the deal for other reasons, but I think it was just an exciting time to learn about things that were just not even on my radar before. So I count myself very lucky to have a job where I can every day go in, meet founders, learn new things, but also have an impact, and where I really believe on something, I can make that decision and make an impact.
Yeah, amazing. And from your perspective, you've obviously looking at Southeast Asia as a market and Asia as well. I think obviously you also feel like you've gone through several booms and busts, right? You had the Asian financial crisis in your career. You also seen a dot-com crash as well. So what are your thoughts from your perspective?
I think right now is a really interesting time for Southeast Asia because a lot of the investors that had invested in these markets historically just aren't here. The likes of, even the Tigers of the world and whatnot, which are spending a lot of time in Southeast Asia and these other markets looking for growth, are increasingly focused on developed markets and really increasingly focused on the US. And so it's good and it's bad. I mean, I think we look at businesses and I think there's less capital. So it means some of the metrics in the businesses you're looking to back, not as strong as you might have seen years ago. But when you see a good business, it means it's a very resilient business. And in a more boom market, I think will do even better than it's doing today. So I think it's a really great time to be deploying capital. I think there are candidly fewer opportunities than there might have been years ago. But I think there's also kind of few silly opportunities and less of a temptation to maybe do some things that I think a lot of us in this industry had done in 2020 and 2021. And so I'm pretty excited about the opportunity to be deploying capital over this year and the next year even. I do feel this market starting to turn, and think with that, there may be the arrival of some international investors looking to these markets as well. We're starting to see actually a lot of investors from markets like Japan come to Southeast Asia, look for opportunities. So maybe it's not the same ilk of US investors, but I think these markets still have very strong growth. And I think there'll be people willing to deploy capital in these markets, which will lead to good outcomes in the medium term.
When you look at Southeast Asia, you also have some exposure to kind of like the China and India story as well. How do you think they stack up? The joke they often say is India is the next China, Southeast Asia is the next India. Everybody's
Yeah.
all equals with each other. How do you think about that?
Yeah. I think they're all actually very different. And I think right now they're actually more different than they have been historically. I think China, because of geopolitical tension, is uninvestable for a lot of folks. And so I think China and India are two markets where they're big enough domestically to have large unicorn outcomes, but a lot of folks are just not touching China. And if they are, it's in offshore structures or they're investing via public vehicles. I think you're going to see very little international capital touch domestic Chinese startups. So that opportunity set, I think, is just one where folks that invested in historically can't or aren't accessing right now. And so I think it'll be exciting for us to see some of these businesses that end up growing and getting very large, because we actually might not have seen them at their early stages the same way we might have seen them in years before, because probably just not looking at them because of LP pressures or political pressures or whatnot. But I think you will see some very interesting businesses coming out of that market over the next decade or so, and probably as I mentioned, businesses that lead some of the stuff that's happening in other parts of the globe. We're seeing a lot of deep tech happening. We're seeing a lot of deep tech happening in China these days, but we're also seeing a lot of Chinese founders appreciate this trend and kind of moving offshore, moving to Singapore, moving to the Middle East, and building large global businesses because the tech talent in China is still very, very strong. I mean, one of the first deals, actually the first deal I had done in Southeast Asia back when I was at Ontario Teachers was a business called Garena, which is now C, which is a very large public company. I probably should have just stopped there because it can't get much better in Southeast Asia. But I think one of the secrets that they had was Forrest had built a team in Shanghai, which was a very strong tech team, instead of kind of leveraging some of the engineering talent in other markets, which at the time wasn't as strong as what was happening in China. And I think that let them really scale much quicker than other competitors in the region. So we know China has massive tech talent. And I think right now we're seeing founders do a variation of that trend where they're building globally, but maybe leveraging the resources in China. Sorry, I know that's a lot of time on China, and it's actually a market I don't spend that much time on today. So I can move on. But I think India is a market I have spent a lot of time on historically. It's a market that I continue to be quite excited about. I think the pace of innovation there has really accelerated, and we're seeing a lot of businesses that are really exciting. And we have a business in our Antler India portfolio that's a space tech business, right? I mean, not many markets are capable of creating kind of space tech businesses. And so there's really some really interesting, innovative, strong technological foundations in India that's quite interesting. And so not only do these businesses have the ability to be strong domestically, but I think they have the ability to export globally as well. We're spending time on another business as well that is copying a little bit of the Freshworks playbook, which is leveraging talent in India to actually sell into the US and target companies in the US because of the strong talent there, as well as a little bit of the cost advantage in that market. So I think we're starting to see the export of these SaaS businesses out of India, which is a trend that I expect to continue and something that's pretty exciting. And we're also seeing the emergence of some AI businesses in India as well. So I think it's a market that I continue to be excited about, both for its domestic prospects, as well as its ability to export into large global outcomes. And then I think Southeast Asia is exciting as well. I think this won't be a surprise to anyone who spends time in this region, but it's not one market, right? I mean, I think Singapore is very different from Indonesia, different from the Philippines. So it's a market that we spend a lot of time on, but we're really spending time, I think, on these individual markets. You can invest in Southeast Asia and not spend time on Indonesia. I think Singapore is starting to be a hub in fintech, especially because you have companies like Rapid or Tune, even PayPal and Stripe have put senior folks on the ground here. And I think some of these people are leaving and starting businesses in fintech, which have large potential outcomes because they just happen to be based in Singapore, but are selling globally. So I think that's a theme that I'm pretty excited about, as well as the large domestic markets. Look, not to be cliche, but especially in Indonesia, 300 million people, it's not a market that you can ignore.
On that note, could you share about time that you personally have been brave?
Yeah, so I think I earlier talked about that I moved to Asia a long time ago. I probably just mentioned it briefly, but I think it was actually a little bit more complicated than that. I had actually put my hand up for international assignment when I was at Ontario Teachers. We had an office in London, we had an office in New York, and I was in finance thinking, I've got to go to one of these major hubs if I'm going to really make it in finance. So I got pulled aside one day and said, hey, we're thinking about opening an office in Hong Kong and we'd like you to move out there. And that wasn't something that was on my radar at all. I had lived at home during university. When I started investment banking, I moved like downtown, 20 minutes from my parents. I had really only started traveling internationally for work. I think I had, since my parents moved to Canada, I hadn't been on a plane. Like the first time I'd been on a plane was in university or something like that. I hadn't had extensive travel then. And this will be funny for people to hear because my friends that know me know I'm now on a plane every other week. So I think I'm compensating or making up for lost time. But I really had no desire to move out to Asia. So when they first asked me, I actually said, no, that's not what I had in mind. If you want me to move to New York, really excited about that. But I think Hong Kong wasn't something I wanted to do. And so I think my boss at the time, to his credit, said, you know what, you don't have to decide right now. We were doing this investment in JD.com. I was going out to Beijing for a diligence trip. He said, go out to Beijing, and then why don't you go to Hong Kong for a little bit and see what you think, spend the weekend there on that, feel it out. And I had actually had a few friends that had moved over to Asia at the time. So I went there for the weekend, met a few friends, scoped it out. And look, I was hanging out in Hong Kong for a weekend. I think they knew I was going to have a tough time saying no. So I think I came back from that trip really excited, both by the opportunity I saw in China, what was happening at JD.com. I remember actually on that trip, had met some folks from Tiger who we were co-investing with in that round in JD. And they were just extremely excited by the opportunity, both in China and India. And then met my friends that were just absolutely having a blast in Hong Kong. And so I went back and I kind of negotiated. It's silly at the time, like, well, how long do you want me to go out there for? Maybe I could do a year and see what I feel like. And my boss was like, look, it doesn't make sense. You've got to sign up for at least 2 years. And it's funny, actually, my parents were having a bit of a tough time with this as well. They'd never thought that I would move away. And so I remember getting this email from my dad saying, hey, what about 18 months? Can you negotiate? And I said, look, I think between 18 months and 2 years, it doesn't really matter. And so I remember getting this touching email saying, hey, even if it's 2 years, I think it's a good opportunity. And now I've been in Asia since 2013, so more than a decade later. So it seems silly that in retrospect that I was thinking about 1 or 2 years, but I think they treated me well. They gave me lots of opportunities. I moved out to Hong Kong with just 2 other people, one guy doing funds, one guy doing buyouts. And I was basically doing all of Ontario Teachers, minority private investing in the region, like in my mid-20s. And so that was really exciting. That's how I got to work on Ontario Teachers, first deal in China, first deal in India, first deal in Southeast Asia. So I think it's really been formative to my career, but it's funny to think about a decision that I eventually said yes to that I originally had said no to.
And let's just say there was a time machine, right? And you could go ahead and you could go back from today back to that point of time or when you were deciding whether to raise your hand for this Asia stint. What advice would you give to your younger self?
Yeah, I will answer that. But I remember sitting down with a friend of mine who had given me advice about whether to move or not. And he had lived in Beijing for a number of years. And we were having dinner. I think it was 2 years into my stint. He goes, remember when you asked me whether you should move or not? And I said, yeah. He's like, wasn't that the dumbest question you could have asked? And I was like, yeah, like it actually worked out quite well. And so I think the advice would be just, this is a really exciting time. I think you don't realize how good an opportunity you have in this market right now. Just go and make the most of it. And I think I really did do that. So I don't know if it needs to be very, very strong advice, but I think there was a lot of, for the first year, feeling things out. And am I going to stay? Am I going to go? How long am I going to be here? Do I need to keep my ties back to Canada? And I think just kind of saying, hey, go in, jump in with 2 feet. This is a really exciting place to be. There's lots of opportunities is the advice that I would have given Fady from 11 years ago.
Awesome. Thank you so much for sharing. On that note, I'd love to kind of like summarize 3 big takeaways for me. First of all, thank you so much for sharing about your early experience at Ontario Teachers as well as at Naspers. I think it was fascinating to hear about your own reflections about what makes a good venture capital ecosystem, but also what are the kind of patterns and startup founders that really get to the next level. Secondly, thanks so much for sharing about why you moved to Southeast Asia and also why you're focusing on at Antler in terms of the mission and vision to really help the next generation of founders really access that growth capital. And I really appreciated what you shared about the vision, about making sure that no matter where they are around the world, that these founders have the coverage and support from a venture capital perspective. Lastly, thanks so much for sharing your own personal experiences. I appreciate you sharing about why it was scary to move to Asia back then, but also I appreciate some of the humor around it, right? Which is that today feels like such a simple decision, but it was a personal experience for you. So on that note, thank you so much for sharing.
Great. Thank you so much for having me on, Jeremy.
Thank you for listening to Brave. If you enjoyed this episode, please share the podcast with your friends and colleagues. We would also appreciate you leaving a rating or review. Head over to www.bravesea.com for member content, resources, and community. Stay well and stay brave.